Welcome. It's good to see you again.
Great to see you, Scott.
So how timely. You just raised your S&P target to 48.25. So you were a little too bullish last year, and you think you're not bullish enough for this year.
Yeah. We're at the midpoint of the year. We took a look at what could happen in the next 6 months, and I think there are some positive catalysts coming up, including, inflation next month. The June CPI could fall to 3%. It really takes the pressure off the Fed. We've got the generative AI story that I think is gaining traction. And I know there's a lot of skepticism of this market, but advanced decline line hit an all-time high last week. So I think we build upon those gains, and we set new highs this year.
Are you sympathetic to the skepticism that you say still exists? Why do you think people are still so skeptical of a rally you think can keep going quite substantially?
I think I understand why investors are skeptical, because we're in a hike cycle and the curve's inverted. But our view has been that this has been an inflation war. So the Fed's not trying to kill the economy, it's trying to kill inflation, and I think they're winning. I think it is still going to be a tough battle. First half was a game of inches. It wasn't like the stocks went up every week, but I do think we're in a buy the dip regime. So I think it's still a street fight. But the bulls getting the upper hand, and we gain maybe as much as 12%.
Do you think the Fed thinks that you can do one without the other in terms of killing inflation without killing the economy? Because every time you hear Jay Powell and whoever else related with the Fed talk, they mention how the labor market is still strong, arguably too strong for their liking. Consumer is still too strong, maybe for their liking. And the economy itself is hanging in there, I think, a lot better than even they expected it would.
Yes, I think the Fed has an optics issue because, 4% inflation doesn't look good for them. But the internals of inflation are really encouraging. Goldman had a nice piece today looking at that. And, first of all, used car prices, which have been really pushing inflation, are set to roll over. That has nothing to do with the stock market. Housing is finally starting to kind of catch up and will start to reflect market prices. That's rolling over. That has nothing to do with the stock market. The labor market's cooled off a lot. We'll get the JOLTS report this week, but average hourly earnings are growing at half the rate it was last year, and 4%. That's where the Fed would like it, and that has nothing to do with the stock market.
I understand, but I mean, the idea that services inflation is still too sticky for the Fed's liking has nothing to do with any of the things that you just mentioned that have come down a lot. And that seems to be the problem that the Fed has and why they're so apparently resolute in the way they talk about what they're still going to do.
That's right. Now 7 items make up services. And, core services ex housing is running actually a pretty decent rate right now, like in the high 2s. But financial services is being inflated because of higher interest rates. Travel could have a seasonal problem that's being fixed in the next 2 months. Because as we know, like when you look at things like airline demand, I mean, their prices are cooling, even though it still looks like they're inflating. And then restaurants is tough, but that I don't know if the Fed wants to kill the economy just to get restaurant prices down.
But they need to kill demand to some degree. At least that's what they would suggest. And that's what, Jay Powell seems to refer to anytime he makes comments about what's going to be ahead. Hike in July, maybe there's another hike this year, all because they're not satisfied that they are full enough into what they would deem to be restrictive territory.
That's right. I think that they're going to have an easier PR story after the June CPI comes out next week, because headline CPI will be down to 3. Now people can start to believe there's real progress because you've gone from 9 to 3 on inflation. And then they can argue that a lot of the 500 basis points of hikes is still going to kick in. So I don't know if there's the urgency to keep hitting with 25 basis point hikes.
Yeah.